Boeing's free cash flow just muscled its way back into the green, carried on the highest commercial plane deliveries they've seen since 2018. But despite all that, an unexpected loss on the new Air Force One somehow dragged their bottom line even deeper into the red this quarter. It's classic Boeing, fixing one leak while another pipe bursts.
Right, except the cash generation is a legitimate shocker here. Last quarter, we covered how management basically braced everyone for another cash outflow in Q2. So flipping to positive territory is a massive reversal.
Exactly. Welcome to Earnings Unscripted, everybody. It's July 28th, 2026, and today we're dissecting Q2 for Boeing, ticker BA. And Miro, you're totally right. Banking $631 million in positive non-GAAP free cash flow is a huge win for the factory floor.
It really is. Total revenues climbed up nicely, too, hitting roughly $24.5 billion. But clearly the market didn't quite know how to price the mix of good and bad news today.
Schizophrenic is the word I'd use. The stock gapped up hard before the bell, totally nosedived right as the morning earnings call kicked off, and then steadily clawed its way up all afternoon to close higher by almost 5%.
Which just proves why trading the opening bell on earnings day is usually a terrible idea. And obviously, we're purely analyzing market psychology here. This isn't certified investment advice, so guard your own capital. But honestly, that mid-morning plunge perfectly mirrored the whiplash inside the actual report.
Right, because underneath that strong cash number, the supply chain is still highly disjointed. Ortberg mentioned they literally had finished wide-body planes trapped on the tarmac, unable to go to customers, just waiting on regulatory paperwork for the passenger seats.
Waiting on chairs. We talked about this bottleneck last quarter.
Yes, the chairs are still holding hostage multi-million-dollar assets, though they finally shipped Riyadh Air's planes once the seat signatures came through in June. But then you look at defense, which we thought was finally stabilizing, and suddenly there's this chunky new charge on the VC-25B.
$280 million, to be exact, and it completely wiped out their defense margins for the quarter.
Right, so wait, that's Air Force One. I thought their fixed-price legacy bleeding was mostly fenced off by now. Why are they suddenly taking a new reach-forward loss on the president's plane?
Because they're fundamentally altering how they build it. They're actually ditching FAA certification on that airframe and trying to push it entirely into military regulatory channels.
So wait, that sounds like a shortcut, right? Like they're just bypassing commercial red tape to get the president's plane done faster?
You'd think so, but no, it's actually the opposite. On paper, it streamlines the regulatory gauntlet, but in reality, moving the goalposts with military regulators on a notoriously unyielding fixed-price contract is incredibly dangerous. You're basically opening the door for new out-of-scope testing obligations.
Oh, right, because military specs change on a whim. So that's what triggered the massive new charge we mentioned?
Exactly. They padded the build and test schedule and took the financial hit now. The CEO laid it out on the call, saying, "While the charge is disappointing, we recognize how critical schedule performance is to our customer, and we are investing accordingly to maintain our commitment."
Okay, investing accordingly. That's highly sanitized CEO speak for, we don't have a choice but to pay whatever it takes so the White House doesn't get mad.
Pretty much. It starkly reminds investors about those permanent landmines buried in these legacy deals. But look, defense is just one side of this. The commercial backlog just officially soared past $715 billion.
That's an insane number. That's a record, right? Demand isn't just strong, it's totally insatiable right now.
Right, but delivering that value hinges on solving Tier 2 and Tier 3 supplier bottlenecks. They're struggling to get wings, they're missing engines from GE. Ortberg didn't sugarcoat the engine delays either. He explicitly stated, "We have a corrective action plan, a recovery plan that we're working with GE. We did several pause days in the production line to allow supply chain to catch up here."
Wow. Okay, pause days. So they're literally halting assembly lines in the middle of a massive recovery just so the supply chain can catch its breath.
They have to. You can't hit that target of 47 planes a month if half of them roll off the line without engines. And it gets exponentially harder when they try to chase 52 a month later on.
This actually perfectly tees up that fascinating hint Ortberg dropped later in the call all about aircraft vertical integration, because right now the airframers take all the assembly risk, but the downstream suppliers just vacuum up all the heavy profit margins.
Yeah, Wall Street's been deeply confused by that imbalance for years. The supply chain profit model essentially bleeds all the cash out to the component builders, while Boeing barely scrapes by.
Right, and he said the current model is what it is for today's fleet, but they're actively looking at structural changes for their next clean sheet design. So wait, clarify that for me. What does that actually look like on the factory floor? Are they just buying up small suppliers?
Some of that, yeah, but it's fundamentally about bringing the most critical high-margin components back in-house. It's selectively reversing decades of outsourcing, because if they don't, they'll just keep getting bottlenecked by delayed parts that they don't directly control. So it signals a massive shift in capital allocation for the next generation of aviation.
Taking back control makes sense long term, but right now they're still at the mercy of outside forces, including their own workforce. I mean, they've got this October deadline looming with the SPIA engineering union.
Yeah, the Puget Sound Union. Management started early negotiations to head off a potential strike because a work stoppage right as the commercial line finally throttles up would be catastrophic for that free cash flow momentum.
Which makes you wonder if they'll end up overpaying on this labor contract just to guarantee they can actually deliver those backlogged planes.
Honestly, they probably will. When you're sitting on a massive backlog and the factory's finally building momentum, the absolute last thing you want is the line going dark. Buying labor peace is just a cost of doing business right now. And management seems pretty confident in their cash cushion because they actually reaffirmed their full-year free cash flow guidance, keeping it somewhere between $1 and $3 billion.
Well, confidence is one word for it. But wait, does that include the DOJ penalty? Because wasn't that supposed to be a massive cash hit?
It does. The CFO confirmed that $700 million payment hits this upcoming third quarter, but he expects cash flow will still stay slightly positive. Essentially, if they just maintain their current delivery rates, the fresh customer deposits from those planes will wash out the legal fines.
Which is a huge if, given all those supplier bottlenecks we just talked about. It feels like their entire bull case rests on perfect commercial execution because the space side is still hanging out there. Did they address the Starliner delays at all?
Barely. The CEO called it a replanning with NASA, admitting there's, some uncertainty to put to bed. He claimed it shouldn't trigger new costs yet, but given their track record with reach-forward losses, I'd say it's a giant lingering liability.
Yeah, uncertainty and fixed-price space contracts are definitely not words you want in the same sentence. But hey, at least they aren't bleeding cash on core operations anymore. That's a real turnaround.
Absolutely. They just need to keep the supply chain glued together for a few more months.
Fair enough. Well, that wraps up our look at Boeing's quarter, a bumpy but genuine step in the right direction. Thanks for hanging out with us, everyone.
Always a pleasure. Catch you next time.
If you enjoy sorting through the market noise with us, feel free to hit follow on your player of choice. And for full transparency, this whole show, including our synthetic voices, is an AI experiment that's turning a live earnings call into an episode on the very same day. We'd love to hear which tickers you want covered next, so send your requests to earningsunscripted@datamadness.ca or find us on X in the show notes. Thanks for listening, and we'll talk soon.
See you out there.